So today in this video, I'll give you a simplified 5-step checklist you can use next time crypto cracks, so you can quickly judge what that might mean for gold. So no doubt you've heard on Friday a week ago, crypto fell hard. And I mean hard. Although keep in mind, Bitcoin is still over 100,000 US dollars. But regardless, billions of dollars of risky, high leverage bets were wiped out very fast. This wave of forced selling is called liquidations. You're going to hear me talk about this a little bit more as the video goes on. So here's what sparked it. A new 100% tariffs on China was announced, which scared markets and kicked off a really fast risk-off move. But at the same time, gold did the opposite, and by midweek it had soared to record highs. This surge was helped by safe haven demand and expectations of US rate cuts. So, step number 1. What is the fuse? Look for the headline spark. That could be tariffs, war news, sanctions, banking stress, or even a surprise from central banks. This particular time, the spark was the 100% US tariff on China, which flipped markets into absolute fear mode. Step number 2 is leverage blowing up. If traders are using a lot of borrowed money, a drop can force exchanges to auto-close positions. That's called a liquidation, and you would have heard this term being thrown around a lot. It basically creates more selling fast, which furthers the crash. On Friday, reports show the largest liquidation event on record in crypto. Roughly 16 to 19 billion US dollars in positions wiped out, with altcoins hit the hardest. Even the USDE stablecoin slipped temporarily. Step number 3 is gold catching a safety bid. So when fear rises, money often runs straight to gold. This week, gold broke record highs as investors looked for safety and as markets priced in US rate cuts, because cheaper money usually helps gold. Step number 4, how broad is the pain? If altcoins are plunging more than Bitcoin, the stress is usually deeper. That's also typically more supportive for safe haven assets like gold. On October the 10th, Bitcoin fell 10 to 11%, while major altcoins dropped 15 to 30% in a sharp flash crash. Step number 5 are follow-through headlines keeping the pressure on. After the first shock, watch for new policy moves or official warnings that keep risk on edge. The IMF, the International Monetary Fund, warned about rising odds of a disorderly market correction if tensions and financial risks build. This is the type of backdrop that can keep a floor under gold. So keep that in mind when you're trading or investing in gold. But this is not financial advice. So putting all this together, look for the trigger. A big, scary headline hits markets. Look for the mechanism. Heavy leverage turns into a liquidation cascade. Understand gold's role. In fear and with rate cut talk rising, gold surged to record highs. Look at the breadth. If altcoins are falling harder than Bitcoin, that is usually a sign of deeper stress. Understand the outlook risk. If global bodies, such as for example the IMF, are warning about sharper corrections, that news alone often supports gold. So understand that crypto and gold do different jobs. In a shock with lots of leverage, crypto can drop fast. However, gold often acts like the storm shelter, especially when people expect rate cuts. So keep this 5-step list handy. I'm going to put this on Substack. Use that next time there's a crazy headline. Knowledge like this will let you read the room in minutes. However, this is not financial advice. Thank you very much for watching.